Hi, I'm Roshan Pujari, the founder and CEO of Stardust Power. Stardust Power, we are an American developer of battery-grade lithium products designed to secure American energy leadership. We are currently developing a large central refinery in Oklahoma that could be one of the nation's largest lithium refineries. Thanks for having me on today, Matthew.
Glad to have you on board. First time we've met or spoken, so I'm excited to learn a little bit more about you. But if we can we just start with a little bit about you? Where are you from? What have you done before, and how's that relevant to what you're doing today?
Yeah, so my background is as an entrepreneur and investor. I actually grew up in Oklahoma, where the site is being developed. I founded multiple companies, including a boutique investment firm, Vikasa Capital. And around 2019, we started looking at the lithium space, and we really dug in deep, started working with Stardust Power co-founder Pablo Cordogoso while he was our advisor. We made multiple investments into the space, and what we really saw was that the critical gap in the supply chain for lithium is processing capacity, and that's when we founded Stardust Power to address that particular need.
Okay, so processing power. I mean, you did enter the space at an interesting time, and it's gone through a few changes, a few incarnations in the past 5-6 years since you've been going. Has that kind of shaped your thinking? Has it changed your thinking along the way?
There has been a lot of ups and downs in the lithium market. But what we see is what demand and projected demand is, the transition to a more battery-powered economy. So while there has been a lot of movement in the spot market, for example, we really see the fundamentals not changing and growing need for these type of products.
Okay, and let's look at the kind of landscape. You've settled on lithium refining as the means to differentiate yourself. How do you feed the refinery? Where are you getting the stock from?
Yeah, so a strength of our business model is building this large central refinery, but optimizing it so we can aggregate feedstock and scale manufacturing. So that gives us the ability to accept it from multiple places. We can source from Argentina, United States in the Smackover, even in Canada where there are burgeoning lithium fields. So the power of aggregation gives us the ability to scale manufacturing.
Right, and obviously in a space, the junior space, which is finding it hard to raise capital to get into production, to even be able to have an agreement with you. Does that make you nervous, or do you think there's enough supply out there outside of, say, North America, which you can tap into?
Yeah, in South America, there's existing production, proven suppliers, especially to jumpstart. We're really bullish on what's happening in America as well. There's been a lot of positive movement. Large oil and gas players like Exxon and Chevron have gotten into the space. And we also see the future of American lithium as brine-based. Very difficult to permit hard rock assets in the United States, but we have a really robust oil and gas industry that's getting into the space. So we see the opportunity for a lot of chloride being developed in the US and other places. We also see the economic model moving more towards the oil and gas market, where you have set local production with central refining. And so I think our business model makes a lot of sense in this climate and context.
Well, I think it's interesting that the oil and gas guys are getting back into this. Their balance sheet's a little bit bigger. Not such a big concern, but which gets us into the next phase of this conversation, which is about you're going to need contracts or letters of intent or binding offtake agreements, bits of paper where the bank take it to the bank and say, right, it's okay. We're covered. Give me some money.
That's right.
That wonderful conversation. So where are you with all of those?
We've been working really hard to get to that inflection point of FID. We've been working with our lead financial, MUFG, one of the largest non-Chinese banks in the world, on getting ready for that project finance. And so many of the milestones needed for that, such as having a strong supply partner, controlling your site, permitting for major construction, are milestones that we've already accomplished. And happy to note that we have recently concluded our FEL Level 3 engineering study, which is a monumental milestone from an engineering, de-risking, techno-economic model, which is really a precursor to that major project finance. So we're moving the ball down the field and moving to project finance next.
Right. So, but you better explain. FEL3 means what?
Yes, it's our front end loading level 3 engineering study conducted by Primero USA, a leading EPC firm for critical materials such as lithium. And it really goes into the engineering, the overall plans to build the refinery.
Right. Okay. So you feel that technically you've now will be able to answer all the questions for any potential off-takers in terms of your ability to refine. But I'll come back to, are they satisfied in terms of your ability to generate, sustaining steady long-term supply at scale at the moment? Have you got contracts or agreements on that front?
A lot of the commercial agreements might be non-binding or LOIs at this stage and materialize over the project finance period. So the bankers have input on how those commercial contracts. So happy to report that, all of that is in process. We did file an 8K earlier this year with executing an agreement with a very well-respected off-taker, one of the largest trading houses in the world. So we really feel this FEL3 engineering study really is one of the key milestones prior to that project finance.
Right. Okay. So let's assume all of that's in place or gets in place. What are you trying to build in terms of scale? And what can you tell us what that could mean in terms of economics if you deliver that?
Yeah. So what we're building in 2 phases is a lithium refinery with the ability to produce 50,000 metric tons of battery-grade lithium carbonate per annum. We'll do it in 2 phases. Phase 1, we'll do the first production line of 25,000 tons, and then we'll build its sister line. We've estimated that phase 1 capex or construction costs are around $500 million. We've been able to create substantial savings from the original estimates in our front-end loaded engineering level 1 study. So happy to increase the efficiency of the product, improving margins for investors.
Okay, so where are you at the moment? So in terms of, I'm trying to work out how you ensure commissioning and pre-commissioning milestones, get hit, because I assume there's a kind of financial component to that. So where are we with money? What's the balance sheet look like today?
Well, I'll refer to our financial statements on this, our S1 registration statement, and our most recent audited financials for issues of material non-public information. But as I mentioned, we just completed a capital raise last quarter of approximately $4.6 million. And the next phase is now to raise both the debt and equity, which we can do at an asset level as well. So it might not be from capitalization of the parent company, but gives us a lot of opportunity for that.
Right. So, but what would you be looking to raise at that point? Because obviously the 4 million or so recently, it's not a bunch of money, but it kind of tops things up. But what will you need to be raising to yourselves in the say next 12 months? Because $500 million compared to where you're at today isn't a big leap, but you're going to need to put that financing stack together. So how do you do that?
Yeah, so I think when you look at financing, there's 2 levels: pre-FID capital, which is the most difficult tranche, and we've been able to raise the money to pay for engineering, to pay for site acquisition, for permitting, and all those important milestones. And then at this definitive nature, we can look at project finance, which includes debt. So given that we have a very limited technological risk, we're using off-the-shelf, proven and established technology, we see the opportunity to raise a high level of debt, 75 up to 80% potentially, limiting the equity contribution. So, the next phase for us is to really raise this project finance so we can start major construction on phase 1.
Okay. And what are the other kind of the long poles in the tent for you? Things that could hold you back in terms of, I guess, key permits, environmental safety, construction, et cetera?
Well, I'm happy to report that currently we are already permitted to start major construction. We have been notified by the Oklahoma Regulatory Agency that we do not need a water permit because we're using a closed loop system, zero liquid waste, zero liquid discharge, so we're not creating water waste. And we are been notified that we only need a minor air permit, which has already been administratively approved by the state and is in the permit writing phase. So looking forward to report good news on that in the near future. So very limited permitting risk, strong jurisdiction for business in Oklahoma, strong connectivity with the government there that has been incredibly helpful.
Right, so good place to work. In terms of the competition, who else in North America is going to be doing what you do or already does what you do?
You know, currently there is very little battery grade lithium production in the United States. ALB has a facility as well as others. In total, I estimate that only up to 20,000 metric tons of battery grade lithium carbonate is produced in the United States. So in terms of competition, you know, we see that there is so much demand that anyone that can produce many that can produce battery grade lithium in the United States should be able to sell their products. Happy to say that even at this stage, we have a strong offtake partner interested in taking 80 to 100% of our products. So in terms of competition, there are other developers, as mentioned, Chevron, Exxon, but very little production in the United States currently.
Right, okay. But do you expect that to kind of, we've seen a lot of conversation out of Department of Defense, Department of Energy, around the critical minerals list and actually finally putting their hands in their pocket and giving out some dollars, which is great news. But in terms of the rest of the market, when I look at the auto manufacturing sector, and people seem concerned that maybe that's gone off the boil a little bit. What's the actual reality on the ground in terms of demand?
You know, so two things I think you're asking. One is, you know, whether the sector will continue expanding now. And given the long lead items for many of these projects, it takes a while to get them online. Currently, Lithium America is developing a really big facility in Nevada, and there are others. But given the demand and projected demand for these battery grade materials, we still project a deficit of these materials by 2030. So, you know, wide open market from there. In terms of continued demand, you know, we see demand rising month over month, quarter over quarter, year over year. There might be some debate about US growth rates, but the global market continues to expand. China continues to sell more and more EVs in different markets. So a lot of growth coming up over the next few years as the world diversifies into batteries more and more.
Right. Now, obviously, we've seen a lot of conversation about, you know, critical mineral security, and by that it means ex-China predominantly, especially when it comes to lithium. In terms of your access to, you know, U.S. government departments, whether it be energy or otherwise, on like the ATP loan, for instance, or the federal funding or grants. Is there much that you can access?
President Trump has been very progressive on onshoring critical materials production, as you referenced earlier with the MP material deals. Another $1 billion was announced for the industry. The Exim Bank has been very aggressive in financing shovel-ready projects similar to ours. So there is a lot of push in Washington for these onshoring, especially of processing, which is highlighted as a national security concern. So we continue to see forward progress in Washington. From a state perspective, the Oklahoma Department of Commerce has given us an analysis of up to $257 million in largely state incentives to develop our facility there. So we're seeing a lot of tailwinds from a federal as well as a state perspective.
So again, just looking at the market, I want people to understand the macro for lithium. You know, you've seen prices come off in the last 2.5 years sharply. Maybe I think you like it, and I think rightly that the market got ahead of itself for sure. Where is the price going, and why does your model protect you should it you know, fall off again?
So, you know, as you mentioned, there has been a lot of volatility in the spot market. What we're coming out of, as many refer to as the lithium winter, when prices came down so low. And there's a couple of reasons I see there. Maybe in 21 prices spiked dramatically, probably a little bit too high. But also there has, given the nascent nature of the market, it gives foreign entities of concern the opportunity to drive prices down, to stifle competition in the US. And we've seen a lot of that happen, and other lithium projects have not moved forward in this price environment. But as I refer to the demand and projected demand, we know what the fundamentals of the market, and these are very valuable things. A focus on the processing side of it also gives some ability, but from the American perspective, doing it in America gives supply chain security, which is, in this global environment is equal important to price. So we see a lot of benefits of processing inside the United States.
Okay, and would you look to move to sort of vertical integration type model, i.e. exposure to upstream risk? Would you think, again, sticking with the business model, this is what is needed, and therefore you can deliver the kind of margins that you hope?
I think there's opportunities for that down the line. We want to be laser focused on getting phase one fully financed and moving into phase one project construction, but we do see opportunities for that as a public company. But also, given the way we see the market moving, where small independent producers don't have the project economics to build refining components to their facility. So we see by having a large central refinery, we can anchor the ecosystem and bring online further production upstream. So whether it's vertically integrated, whether it's working hand in hand with suppliers, we see a very strong business case.
Okay, and can you remind us what the last economic study said with regards to what the revenue could be, what the margins could be, and the scale of the opportunity?
I don't know if we've released those numbers as of date. And what I can say is that our margins are in line with industry standards. And I mentioned the CapEx at about $500 million.
Okay, something to work out. Okay. Again, just I guess if there's on the technology side, have you got like strategic partners involved, and so where's the knowledge come from with regards to delivering a kind of proven refining technology?
Well, we have a lot of industry knowledge on our team. As I mentioned, Pablo Cordogoso, co-founder, chief technical officer, one of the leading voices in lithium, over 13 years at SRK as an advisor in this space. Parmita Das, a former C-suite at Rio Tinto, chief strategy officer, multiple investors into this space. Randall Harris, who is senior project director, has spent his last chapter of his career formerly at Primero designing these lithium refineries. So that is a value out of our team, deep industry and especially lithium experience.
Okay, but no outside strategic, no Chinese involvement, presumably. It's a North American company.
We do not have China in our supply chain.
Japanese, Korean?
We love working with allies and aligned partners, and happy to work with the Japanese as well as the South Koreans.
Right. Okay. So where do we go from here? What's next for you guys?
Yeah,
what do you need? Because I'm looking at, as you and like all CEOs will say, there's a massive disconnect between the opportunity in front of us and how the market's valuing us today. Is it just purely a legacy of where the lithium market's been so far, and how do you kind of disconnect yourself from that perception?
Yeah, there's been I believe there's been a lot of external actors on our stock. We went through this business combination, which, may have had an impact, this lithium winter, and we did a couple of capital raises. But at this inflection point of being definitive at FID, it is easy to see the value we've created. So we are confident by continuing to execute our business plan, we can continue to create value at FID, at major construction, at commissioning. We know how valuable the company is. There's been a lot of volatility. We're really appreciative of our investors' support, of our current investors interested in continuing their investment, and we'll keep executing our business plan.
Well, like I said, it's a nice overview, Roshan. It's kind of interesting how you position yourself in the North American market, and in the best position for success. So, just stay in touch. Let us know how you get on for the next phases. We'll be interested to see how you do. Thank you.
Great. Thank you so much for having me on. It's a great conversation, Matt.